Hello and welcome to this video. Today we're going to be doing a stack analysis on Oracle. Now, if you don't know what Oracle is, it is a database software company and cloud computing. So they make a lot of databases and softwares for those databases, and they're also pivoting into the cloud computing market where they're competing currently with Google and Amazon as their two main competitors. And of course, remember, if you like this video, please don't forget to like and subscribe. And of course, remember, this isn't financial advice, this is purely entertainment and educational purposes. Now, as you can see, first let's take a look at the graph. As you can see, we are seeing a bit of volatility recently due to the fact that many people doubt how much more investing there's going to be into the AI space, which could impact Oracle, as they recently did make a partnership with Nvidia. So that is why it has had this huge volatility recently. So if that keeps on going downwards, chances are the stock is going to take more hits if we don't see any upticks in more AI investing. We did see Meta this week went out and said that they are going to be making more AI investments, which of course is great for Oracle, which was also one of the reasons why it had this huge uptick on Friday. Now, if we look at the earnings, we can see down here it's not that great. As you see, we do see a bit, but they are down by only a little. As you can see, down by 1%, 0.8 and 1.4. Now, something I do like about Oracle is the dividends that they pay out. As you can see here, we have a lot of dividends paid out in April and in January and in October and in July. And the reason I like this is because they pay them out 4 times a year, which means you can easily get a dividend snowball rolling and then reinvest into companies, which means you can get more stocks more quickly and then more dividends and so on and so forth. Now, however, we did see it, given the previous track record, we are trading at quite highly compared to earlier years, as you can see here. Let's go back to the start of 23, we're trading all the way down in 80 bucks, 70 bucks, in even lower. At one point, we were trading all the way down here in 62 back in October of 22. So from that point, it was a great stock if you owned it. I don't own any myself. And recently we did see chances are it's going to keep going upwards, as we can see here on the technicals. We have a golden cross, which is a great technical, which shows that the upwards momentum is greater than the downward momentum over long term. Also that we are trading quite hard in the RSI. This might mean you need to wait to buy, because high RSI often means a bit of a sharp drop in price, because this means it's overbought. But that was probably because it was Friday and a lot of people went out and said that they are going to be keep investing into the AI space. So which is going to be great for Oracle, as they also make data centers and cloud computing, of course. So as you can see, also previous to that, we did trade quite a lot down in the bottom RSI. As you can see, we also did see a downfall here. I don't know what RSI is. That is the relative strength index. If something is below 70 but above 50, it's in the upper channel. As you can see here, the graphs move up. If it's down here in the lower channel, below 50 and above 30, it's in the downward trading channel. Now, if it's below 30, it's gonna be oversold, which is when these red dots appear, and if it's overbought, it's above 70. These green ones appear. As you can see, where we see sharp rises and then also often sharp falls right after, and that often happens when it's oversold or overbought, and that is often due to a lot of algorithm trading the stock in those periods. Now, as you can see, the earnings, they are quite stable. Of course, they missed some, but they missed them by such a little margin. I don't really think it matters, to be honest. And then here we see dividends. They pay out 1.13%, which isn't that great, but it's 4 times a year, so that's of course better. But many IT companies or tech companies don't really pay out great dividends. Now you can see here their annual income. They make great money. As you can see, they keep increasing their revenue and the net income. We did see some greater margins back in 19 and 20. And that's because they've made huge investments recently, which are going to be pushing their margins down, and they're also taking on a bit more of debt because of that, which of course isn't great. But if these investments turn out great, it's going to be nice. They recently bought Cerno, and they are making a transition also to get into the medical industry and trying to digitize that, which I think could be a huge uptick for Oracle if it works out perfectly. Now, if you look at their seasonals, let's look at them here. Let's just go back to 2010. This past 15 years, as you can see, it's a bit all over the place, but more often than not, we see returns. Now, it isn't going to be returns of 150%, but it is more often than not double-digit returns, as you can see here, which is going to be better and better over time, which means, of course, if you have 20 one year and 20% again the next year and 11%, it's just a snowball that keeps on getting bigger and bigger and bigger. Now, we do see some years where they take a 18% loss, of course, and 17, but compared to the other years where it made great returns, I really think it's a very nice stock, to be honest. Now, the technicals in this for the day is a buy. For the month, it is still a buy. It even moves over to strong buy, and the reason for that is, given that we do see some volatility here, as you can see, but even though up and down, but we do see quite a lot of gaps in the graph, as you can see here, and that's because there is huge volumes being traded off the market, which is better which is worse for the technicals, as then it doesn't take into considerations these gaps. That might be a reason, but of course it's also just the fact that we recently had a golden cross. But overall, we are also up for the past month or so. As you can see, we have the 4th today. When was the 4th? Yeah, we were trading in 130, and as you can see, we're all the way up in 150. So of course, it is better for the month, but it is quite volatile at the moment. So I would wait to buy this if I were to buy this, because it is simply too volatile at the moment. Also, given the fact that we are this high in the RSI, I would prefer more around 50 or 60. We are currently almost on a support level right here, as you can see. If we do manage to cross this level up here, that would mean greater stability for the stock, because this means we did pass a previous price point, which would be great, and chances are we're going to keep going up. But we have a lot of support levels up here, as you can see. We also have one up here. That is the closest support level, and if we break through that at 170, that is going to be quite great. And then we have a last support level up here, or breakthrough point, whatever you want to call it, right up here. So as you can see, chances are if we break through all of these, it's going to be a great stock to own. But if we don't, then we are going to be sitting down here, as you can see, at 120, which would be quite a hit from where we're currently sitting at. So of course that would be bad, but let's see how the stock moves. I think it is going to be quite volatile still, so I think we need to be very careful where we're looking at these technicals at the moment, because I think once it breaks through one, maybe it's going to keep on rising up, or if it falls through this one, then the next one we have for proper is going to be down here at 100. So it's very, very volatile at the moment. You can also see that down here in the volatility curve, as you can see, it is increasing recently. So it is quite volatile, so of course be wary of that. Now the analyst rating on this, as you can see here, there are quite a lot. We have 20 strong buy, 6 buy, and 14 hold. Some are minus 14%, which of course would be one of the hold that is down here, but otherwise the average is up by 17 or 16.8%, and the max is up by 45.9%. So overall, quite great analysis ratings, and of course the fact that we have 40 on it and all of them are this positive are great, because it means that they are in tow with each other. And I do like to see a lot of analysis, and with them all in the same, I would like to maybe see one sell or two, because sometimes when we do see a bit too many on the same, that could mean that there is a hype around the stock. Of course, there isn't an oracle, but more often than not, if they are all too many on the same categories, it is a hype. But given the fact that we have just as many is strong buy as buy and hold, means they are proper analysis, as we don't see them all in 10 strong buy or maybe in 10 strong sell. Now that was my analysis on Oracle. Now if you did like this video, please don't forget to like and subscribe, and leave any comments on the company you want me to make analysis of in the comment section below.